Hello everyone. Welcome back to Unday Radar Talks. Medical Properties Trust shares surged 16% on Thursday. The surge in the stock means that a lot of long capital has intervened in the stock price between $4.84 and $4.32, but the short squeeze does not seem to be over. Data shows that some capital exited the market during Thursday's trading, but this did not cause the stock price to fall. The late bulls still tried to maintain the stock price at a relatively high level, which means that the stock price may still rise further. The stock's trading volume on Thursday was significantly enlarged because the surge in the stock price led to a large amount of capital inflow into the stock, and the chips generated by the high stock price may mostly come from the selling of locked-in capital, because the stock's position below $4.84 has not been significantly reduced. It is worth mentioning that the stock's trading volume in the first 15 minutes and the last 15 minutes of the regular trading session on Thursday was relatively large, and the trading volume distribution in the rest of the time period was relatively even. This distribution pattern reflects that the bearish and bullish sentiments of the stock are relatively balanced, but the stock price remains high, and it seems that the bulls have digested these chips. Let's take a look at the 15-minute chart of the stock. We can see that the stock price continued to rise during the trading session on September 9th, but the stock price continued to fall during the trading session on September 10th. But the stock price did not fall below the level of $4.67, proving that long capital entered the market to take over the chips while also maintaining the stock price strongly. After a quiet trading day, the stock ushered in a crazy rise. The stock encountered a large amount of short selling after the market opened on September 12th, but the bulls quickly fought back and pushed up the stock price further. After the stock price reached $5.74, the market saw a continuous sell-off again, and the bulls blocked it again and maintained the stock price at a relatively high level. Although the bulls' performance was very strong, a large amount of capital seemed to have withdrawn from the market on that day, which also indicated that if the bulls continued to push up the stock price, it would face greater resistance. Let's take a look at the capital flow data of the stock. We can see that the capital flow of the stock was net inflow for 4 trading days from September 3rd to 11th, and through data comparison, it is found that the capital flowing into the market during this period is much higher than the capital flowing out of the market. What is important is that the stock price continues to rise. The net capital outflow of the stock on September 12th was $2.2 million, but the trading volume on that day was significantly enlarged, which reflects that the capital flowing into and out of the market has increased significantly due to the sharp rise in stock prices. But the proportion of capital flowing out of the market is larger. But the problem is that the stock price is still high, so it still retains the possibility of further rise. Let's take a look at the market position distribution data of this stock. We can see that the stock has a large number of positions below $4.84, which is the driving force behind the sharp rise in stock prices, because there is a large amount of long capital involved below this price, and this price has a 15% profit margin from the current position, but the capital is unlikely to be exhausted in one trading day, because the position distribution between $5.30 and $5.60 is not large, of course. This is compared with the position distribution below $4.84. I think the stock will go up further and may even break through the $6 level because the bottom profit capital does not seem to exit the market in large quantities. But this is also more dangerous. If the profit capital chooses to sell off in large quantities, the stock price may reverse and fall at any time, but I think it is still possible to reach the $6 level, which is less than 7% profit margin from the current price, but 24% profit margin from the $4.84 level. Okay, guys, this is my price prediction for Medical Properties Trust stock. Thank you for watching. If you like my analysis, please click the subscription button and give a thumbs up. I will bring you more latest price predictions for hot stocks later. See you in the next video.